Every second, Visa processes over 65,000 transactions. Think about that for a moment. Millions of payments, billions of dollars, all flowing seamlessly through a single company, Visa Incorporated. But here's what's crazy. Visa doesn't lend money. It's not a bank. Yet somehow this silent giant has become the most valuable financial services company in the world. How did a company with no loans and no deposits become the backbone of global commerce? How does it generate billions while staying completely in the background? We're about to uncover Visa's money machine. But first, we have to go back to a time when credit cards didn't even exist. The early 1900s, a time when banks were not for everyone. If you weren't wealthy, if you weren't part of the financial elite, you didn't stand a chance. Banks didn't care about the working class. They didn't care about the small business owners, the immigrants, the dreamers. But one man did. His name? Amedeo Giannini. He wasn't born into privilege. He wasn't part of the Wall Street crowd. He was the son of Italian immigrants. And unlike the bankers of his time, he saw something they didn't. A future where credit wasn't just for the rich. A world where money could move, not just for the powerful, but for everyone. And in 1904, he made a move that no one saw coming. He opened a bank for the people, but this wasn't some grand institution with marble floors and towering columns. No. His bank started with nothing but a simple folding table. No security, no credit scores, no bureaucracy, just a handshake, a promise, and an unbreakable belief in the people. And guess what? It worked. While the old money banks turned their backs on everyday Americans, Giannini welcomed them with open arms. And that tiny operation, it grew fast. Within years, it became one of the most powerful financial institutions in America. But here's the thing, this was just the beginning. Because years later, another visionary would take Giannini's idea and turn it into something even bigger, something that would change the entire world of finance forever. By the 1950s, America was changing. The post-war economic boom was in full swing. Families were moving into suburbs. New highways connected cities like never before. Shopping malls were opening everywhere, and people were spending. But here's the problem. Americans wanted to buy more, but they didn't always have the cash. Banks weren't handing out loans to the average person. If you couldn't pay up front, you simply couldn't buy. But then, businesses saw an opportunity. Gas stations created special fuel cards. Airlines introduced travel charge cards. Department stores had their own credit systems. Each one promised, buy now, pay later. And Americans loved it, but there was a major flaw. Each of these cards only worked in one place. A gas card, only for that gas station. A department store card, only in that store. And customers hated juggling a wallet full of different cards. Then came a game-changing idea. What if there was one single card that could be used anywhere? A card that could work at any store, any gas station, any business? Sounds obvious today, right? But back then, it was radical. Because to make it work, banks would have to convince businesses, customers, and financial institutions to adopt a completely new way of handling money. And in 1958, one bank took the risk, Bank of America. It started with 65,000 unsuspecting people. One morning, residents of Fresno, California opened their mailboxes and found something unexpected, a Bank Americard. It looked official. It had their name on it, and it came with a $300 spending limit. No application, no approval process, just free money. It was called the Fresno Drop. And at first, people were ecstatic. A card that worked at multiple businesses, it felt like the future. People rushed to stores, gas stations, and restaurants, swiping their new plastic money. But then, the problem started. Fraud skyrocketed. People racked up debt they couldn't pay. Defaults went through the roof. And Bank of America, they were bleeding money. Within months, they had lost millions. Executives panicked. Had they just made the biggest mistake in banking history? This experiment should have been a total failure. Other banks were laughing at them. Newspapers called it financial insanity. It should have killed the idea of credit cards forever. But instead, it became the foundation for a trillion-dollar industry. Because buried within the chaos was a system that could be refined. And what happened next would change the way the entire world spends money. By the late 1960s, Bank of America was at a crossroads. The Bank Americard experiment had survived the chaos of the Fresno Drop. Credit cards were catching on, but there was a problem. Bank of America couldn't handle it alone. They had millions of customers, thousands of businesses accepting the card, but the system was too big for just one bank to control. Their options? Kill the credit card or revolutionize it. They chose revolution. And in a move that stunned the industry, Bank of America did something unheard of. They licensed their credit card system to other banks. banks. For the first time ever, competing banks, rivals, were allowed to issue the same card. This wasn't just a business decision, it was the birth of an entirely new financial system. Because now credit cards weren't just a Bank of America product, they were a nationwide network. And at the center of it all, one man, a visionary, a rebel, a leader obsessed with creating order from chaos. His name, Dee Hock. To understand the creation of Visa, you have to understand Dee Hock. He wasn't a banker. He wasn't a Wall Street insider. He was a farm boy from Utah with a talent for seeing patterns where others saw confusion. And when he looked at the financial system, he saw a mess. Hundreds of banks, thousands of businesses, millions of customers, all using different systems, different rules, different contracts. It was chaos. But Hock saw an opportunity. What if instead of trying to control everything, they built a system that could run itself? Not a company, but a network. A system where banks, merchants, and customers could all connect without a central authority. It was a radical idea. No one owned Visa. No one controlled it. Instead, it was a decentralized, self-governing network. And that idea would turn Visa into one of the most powerful financial entities on Earth. But there was one last hurdle: the name. Bank Americard was too closely tied to Bank of America. If this was going to be a truly global system, it needed a name that was simple, a name that could be recognized in any language, any country. So in 1976, Hock led a bold rebrand. The name? Visa. Why Visa? Because no matter where you were in the world, the word Visa meant access. It meant acceptance. It meant money without borders. And it worked. Within a decade, Visa expanded into Europe, Asia, and beyond. The future of money was here, but Visa's rise, it wasn't smooth. Behind the scenes, rivalries were brewing, lawsuits were piling up, and backstabbing was just beginning. If you think Visa's biggest battles are behind it, think again. For decades, Visa has ruled the world of payments, but with power comes enemies. Governments, regulators, tech disruptors. Everyone wants a piece of Visa or wants to tear it down. And over the years, Visa has been at the center of some of the biggest financial battles in history. It started with one of the most controversial leaks in history. In 2010, WikiLeaks, led by Julian Assange, released classified U.S. military documents. The leaks exposed government secrets, war crimes, corruption. The world was watching, and WikiLeaks, they needed funding to keep the leaks coming. So supporters flooded in with donations. But then, Visa stepped in. They blocked all donations to WikiLeaks. No explanation, no warning, just a complete financial shutdown. And that's when the internet fought back. Hacktivist group Anonymous launched a cyber attack. They called it Operation Payback. Within hours, Visa's website crashed. Their systems were overloaded. They were shut down by their own technology. For the first time, Visa looked vulnerable, and the world saw just how much power they really had. But Visa's battles weren't just with hackers. In 2015, Australia's regulators accused Visa of something big: manipulating foreign exchange rates. Every time someone swiped a Visa card overseas, Visa allegedly pushed customers into more expensive currency conversions without telling them. The result? Higher fees for customers, billions in extra revenue for Visa. Australia didn't let it slide. They fined Visa $20 million, a huge sum for most companies. But for Visa, pocket change. They paid the fine and kept moving. Because in the world of finance, fines aren't punishments. They're just the cost of doing business. By 2021, Visa wasn't just a payment processor, it was a financial superpower. With over 4 billion cards in circulation and handling trillions of dollars in transactions, Visa had more control over money than some entire nations. And the US government took notice. The Department of Justice accused Visa of something massive: monopolizing the debit card market. They claimed Visa was blocking competitors, squeezing out smaller players, and ensuring they stayed on top. The case shook Wall Street. If Visa lost, it could change the entire financial system. But Visa, they fought back. Lobbyists, legal teams, years of courtroom battles, and in the end, Visa walked away untouched. No breakup, no serious punishment, just another fight won. But just this year, in 2024, the battle reignited. This time, the US government is suing Visa again. Why? Because they claim Visa is crushing fintech competition. For years, startups have tried to innovate payments: mobile wallets, crypto transactions, faster, cheaper networks. And Visa, they've been buying up potential threats before they can grow. In 2020, they tried to acquire fintech startup Plaid, a deal worth $5.3 billion, but the government blocked it. Now in 2024, The DOJ says Visa is still using its dominance to kill innovation. If Visa loses this time, the entire payments industry could change. But history tells us one thing: Visa doesn't lose. Despite every lawsuit, every attack, every scandal, Visa's power has only grown. And if history repeats itself, they won't just survive this battle, they'll come out stronger. Imagine this. You walk into a store, you swipe your Visa card, transaction approved. It takes just seconds. But in those few seconds, Visa just got paid. Not by you, not by the store, but by the invisible system running behind the scenes. Because Visa, it doesn't sell products, it doesn't lend money, it doesn't take on debt. Visa doesn't care how much you spend, as long as you spend it through them. And this is where the genius of Visa's business model begins. For every $100 you spend on a Visa card, Visa earns about 25 cents. That might not sound like much, but now, do the math. Visa processes trillions of dollars every year. Trillions. And when you multiply 25 cents by trillions, those pennies turn into billions. Visa's revenue comes from three key sources: transaction fees, 39%. Every time a card is swiped, Visa takes a cut. Service fees, 34%. Banks pay Visa just to issue their cards. Other fees, 27%. Everything from security services to data analytics. But here's the most powerful part. Visa takes zero risk. If you miss a payment, that's the bank's problem. If a merchant goes bankrupt, that's their problem. Visa never loses, because all they do is run the rails. Think of Visa as a highway. Every financial transaction is a car. Every bank, merchant, and consumer is a driver. And Visa, it owns the toll booth. Every transaction has to pass through them. And every time it does, cha-ching, another fee collected. Visa doesn't care what's being bought or sold. As long as it moves through their network, they get paid. And that is why Visa is one of the most profitable companies in the world. Most businesses face competition, but Visa, it's almost impossible to replace. Why? Because Visa isn't just a company, it's the backbone of global commerce. Its infrastructure is so deeply embedded into the world's financial system that even if a better, faster, cheaper alternative existed, banks wouldn't switch, governments wouldn't take the risk, and consumers, they're already using Visa every single day. It doesn't matter if you use Visa, it doesn't matter if you like Visa, because whether you're buying coffee in New York, shopping online in Tokyo, or sending money across the world, Visa is there, and it's not going anywhere. Because in the world of money, Visa always gets paid. Every time you swipe, every time you type, every time you click, Visa is there, but not in a way you can see, because Visa doesn't have storefronts. It doesn't have branches. It's just there, a vast invisible network, moving money in over 200 countries. It never stops. It never sleeps. And while governments debate, while banks rise and fall, while economies crash and recover, Visa keeps moving. Because at this point, Visa doesn't follow the system. It is the system. But here's the real question. Is Visa too powerful? Should one company have this much control over how the world spends money? Or is Visa simply playing the game better than anyone else? One thing is certain, whether you like it or not, Visa isn't just here. Visa is here to stay. What do you think? Is Visa a necessary innovation or a dangerous monopoly? Is the world too dependent on Visa, or is it just doing what any smart company would? Let us know in the comments below. And if you want more deep dives into the companies shaping our world, hit that subscribe button, turn on notifications, because we're just getting started.